let's start with Bitcoin, actually, because it's had a little mini rally. I actually left California and it was around the 17,000 mark. I plugged my block clock back in 3 days later and it's 21,000. What do you think is the cause for this rally?
So I think overall, a lot of it has to do with liquidity. So historically, Bitcoin has been one of the purest liquidity plays. So when you look at various measures of domestic or global liquidity, generally when liquidity is rising, that's pretty good for Bitcoin. And when liquidity is falling, that's usually Bitcoin's usually either going down or sideways. And starting around the beginning of Q4 of last year, some of the liquidity indicators started to bottom and turn back up, at least temporarily. And I think that, much like other assets had a rally, I think Bitcoin would have had a rally back then if not for the whole FTX debacle. And so that kind of delayed the rally, but with that somewhat resolved, and now kind of moving forward, I think Bitcoin and other aspects of the ecosystem are kind of having their rally, which is really a liquidity rally. And so basically liquidity indicators look okay for the next couple of months, but overall long term, they're still not in a very good place.
Well, it's really interesting because before the price started to go back up, you wrote in your last newsletter that the last time the 2-year Treasury yield dropped below the Fed funds rate near the top of interest rate hiking cycle, it marked the end of the cyclical bottom for Bitcoin. So is that perhaps what we're seeing?
Yeah, so I kind of pointed that out as like something that no one should trade on that specific thing, but it's more like an
Mhm.
observation. And that part of the underlying causation with that, correlation is that generally that's the 2 year, the market kind of assessing that the Fed's getting close to being done its hiking cycle. And so that's kind of what happened last time, where when the 2 year rolled over the Fed funds, that ended up being the top of the hiking cycle, and that ended up marking the bottom of Bitcoin. And so right now, I think we're seeing shades of that. It doesn't mean that it's the exact bottom. It doesn't mean that the bottom's guaranteed in. But I do think that the part of the downward move in Bitcoin that was specifically from the dollar rally, I think that's kind of behind us. And now I think we probably have a longer grind ahead of us to, kind of start rebuilding from here. But I think when you look in the second half of this year, there's still some liquidity concerns.
Mhm.
And so kind of like how in the prior Bitcoin bear market, you had the major bottom in say, late 2018 into 2019. That was the big bottom. But then you kind of had like a later liquidity shock through March 2020, where you went down and went up much faster. It was again another liquidity issue. I would be surprised something like that, like a sharp retest, but it's too early to say because it partially depends on what humans do, what
Mhm.
Jerome Powell does, what different policymakers do, and of course that's always impossible to predict.
So do you think right now that Bitcoin's more affected by the macro environment as opposed to, let's say, the crypto dominoes that were falling, even though we just had, I believe, right before we started this conversation, headlines that said DCG is preparing or Genesis is preparing potentially for bankruptcy?
So I think there's still big things like that can move the crypto specific industry. But overall, like historically, Bitcoin has been very correlated to macro factors and specifically liquidity. And I've looked at it over the past couple of years because a lot of people they look at the halving cycle. That's obviously got some degree of correlation. But then if you look at say Bitcoin and the Purchasing Managers Index, which is one of the leading macro indicators, generally when it's rising, it means the economy is expanding, growth is accelerating. When that's going down, growth is decelerating. If it goes below 50, it's potentially outright contracting. And generally, Bitcoin's rather correlated with PMIs. It usually runs a little bit ahead of PMIs, like it usually front runs it a little bit. And then I looked at it and saw that basically liquidity generally front runs PMIs, and Bitcoin tends to be very correlated with that liquidity. And so for the past 3 cycles or so, it's already been somewhat of a macro asset in that sense. But of course, if you have a big enough industry specific blow up, like we saw with FTX and like you might see with some of these others, that can temporarily override the macro factors because it doesn't matter if liquidity is good if there's some
Mhm.
massive forced selling whale out there.